Hi everyone, welcome back to the audit and attestation class. Yes, we are about to close. This is part 3, which is on reporting on audit engagement. So in this session, we'll be covering in detail about audit of internal control integrated with the audit of financial statement, and we'll do some practice question also. So let's dive into for more details.
Like just quickly recap everything. First paragraph is addressing to the shareholder board of directors, right? And after that, second paragraph immediately is the opinion paragraph here, right? In the opinion paragraph in financial statement, it will go over qualified, unqualified, qualified, adverse, disclaimer. That will continue remain same. In addition to that, for the ICFR audit or integrated audit, you'll be adding these two paragraphs. Then basis of opinion will follow the opinion paragraph, which is a reverse order than the non-issuer. And within the basis of opinion paragraph, we have management responsibility, auditor responsibility, and couple of statement which is mandatorily to be there in your opinion paragraph, right? That we have discussed in detail. And after that is a critical audit matter paragraph which you need to add. And then after, if there is any paragraph require explanatory paragraph, then you'll be adding. So it's an optional, it's not mandatory. But critical audit matter paragraph is kind of mandatory now. So whether you need to define critical audit matter, and if there is no critical audit matter identified, then you need to mention that no critical audit matter has been identified during the audit, right? Then after emphasis of meta paragraph, it's almost similar to the non-issuer. Other meta paragraph is absolutely similar to the non-issuer. Then couple of like basic information like engagement partner name, accounting firms which were involved, joint audit or component audit, signature, city, states, and date. Right. Then one small thing I think we missed to cover is a going concern for the issuer. If the auditor conclude that the substantial doubt remains regarding the entity ability to continue as a going concern for a reasonable period of time, which is 12 months from the report release date, then the auditor should report, or in the audit report should include emphasis of matter paragraph, right, which we discussed above. So there you need to ensure the adequate disclosure has been made by the management, then only you'll be adding into emphasis of matter paragraph. If adequate disclosure has not been considered by the management, then it will be a gap issue. There you will be assessing generally like the going concern issue have a pervasive impact. So there it goes for an adverse opinion majorly, right? So those things you need to evaluate. Then let's do a practice of these two questions to wrap it up this, you can say opinion content stuff, and then we jump into the new topic. So first question is, select the relevant option why an auditor would express an unmodified opinion with an emphasis of matter paragraph added in the auditor report of a non-public entity. Non-public entity means non-issuer, right? So what is the call of the question? What is the call of the question?
Sir, like why in a non-public entity, why there is an unmodified opinion?
Unmodified opinion with emphasis of matter paragraph.
Matter. Yes.
Right. So let's see question. First one, if there is a material weakness in internal control. Second is an unjustified accounting changes. Third is neither unjustified accounting changes nor material weakness. Fourth is both unjustified accounting changes and material weakness. So if there is a material weakness, then it will go into the qualification. If there is unjustified change in accounting, then it goes into the qualification if it is material to the financial statement. Right? Yes, no? Are you guys with me?
Yes, sir.
Yes.
Okay. So that's the reason third answer is correct. Next question. How should an auditor respond? He is unable to gather sufficient relevant audit evidence to support management assertion about the nature of matter involving an uncertainty and its presentation or disclosure in the financial statement. Uncertainties mean majorly relating to litigation, claim, assessment, or future estimation, right? What is the call of the question? How should an auditor respond? He is unable, that means scope limitation, unable to gather sufficient relevant audit evidence for the uncertainty regarding the presentation disclosure in financial statement. Make sense? What is the call of the question? Kashish, Gurmehar, Sanchit, Ayush, what is the call of the question?
So basically,
Basically what?
like when we have to just give our opinion when we don't have the appropriate evidences, so how shall we respond on that?
Anyone would like to add? Kashish,
To support.
So basically, when the auditor is unable to gather sufficient relevant audit evidence, because for forming an opinion, we have
when
to gather.
Auditor is unable to gather sufficient and relevant audit evidence, that means scope limitation. That means a gas issue, right?
Gas issue, yes.
To support the management assertion about the nature of matter involving uncertainty. So there is some matter of uncertainty for that presentation and disclosure requirement. So let's understand like options. First one is consider the need to express a qualified opinion or adverse opinion due to departure from gap. Is it a departure from gap?
No.
So it is a gas issue, not a gap issue, right? First option is incorrect.
Correct.
Yes, consider the need to express qualified or disclaimer of opinion because of the scope limitation, right? Is the scope limitation?
Yes.
So second seems okay. Third is include an emphasis of matter paragraph on his or her opinion indicating the questionable nature of outcome of uncertainty. If there is an uncertainty and you do not get the relevant or sufficient audit evidence, would you be mentioning an emphasis of matter paragraph or qualified or disclaimer of opinion?
Disclaimer opinion.
Anyone else would like to share?
Disclaimer.
Disclaimer.
Scope limitation. If it is like pervasive, it would be disclaimer of an opinion. Yes.
And if it is not pervasive, then
Should be qualified. Adverse.
qualified opinion, right? Or will you withdraw from engagement?
So withdraw is the very last option when we don't.
Right.
So which option is right?
Second.
Why?
विड्रॉ नहीं होना चाहिए, मुझे पता नहीं ऐसा क्यों लग रहा है. क्योंकि इनिशियली जब हम क्वेश्चंस करते थे इस एरिया से रिलेटेड, व्हेन यू आर नॉट एबल टू गेट द एविडेंसेस or the relevant evidences, appropriate and complete evidences. Initially, जो हमारा discussion हुआ था, then we discussed it's better to withdraw from such an engagement instead of expressing any opinion.
Yeah, Ayush, Sanchit, would you like to?
The second point says consider the need to express qualified opinion or to disclaim an opinion. So it's first we will consider our opinion option. If we can. Because of scope limitation, we can do a qualified and disclaim opinion. If that also is not feasible, then only as a last resort, we will go off and withdraw from the engagement. We will first go all the options.
ये सर पहले qualified opinion के लिए हम बोलेंगे, अगर नहीं हो पाता then disclaim करेंगे, और disclaimer तो नहीं है तो फिर then we will
सही आपको बताता हूँ सर. आपने बोला था जब एक में दो आंसर सेम लग रहे हो, so we should go with the more relevant one, and withdrawal is the last option. So I think that's why we should consider the second option.
But मेरा point ये है कि अगर evidences ही appropriate complete नहीं थे basically, so हम कैसे मतलब how can we express a qualified opinion जब हमने उसको ascertain ही नहीं किया, evidences ही नहीं थे, then how can we express a qualified opinion? मतलब मेरा बस ये doubt है.
नहीं देखो ना, इसमें ये गैस इशू है ना, ये गैस इशू है जिसकी वजह से हमारे पास evidences आ नहीं पा रहे. तो वहां पे हम फिर जितना भी प्रोसीजर्स किए वहां पे जाके हम बेसिकली डिस्क्लेम करेंगे दैट बिकॉज ऑफ स्कोप लिमिटेशन, और जो बेसिकली जो मैनेजमेंट की तरफ से रिस्पांसेस बेसिकली जब नहीं आ पाते थे, सो वहां पे फिर हम
another thing जो disclaimer of opinion है, that is because we are giving when the issue is pervasive, like it's like affecting the entire financial statements. In that case, maybe we can go for an withdrawal. But if it's a qualified opinion, I think we should not go for withdrawal, and we can particularly qualify our opinion. So
Ayush, did you understand what Gurmehar question is?
कि वो कह रहा है कि withdrawal
Gurmeher is saying if like client is not allowing you to perform certain procedure, should we withdraw or should we go for qualification or disclaimer? Right, Gurmeher?
Sir, इसमें वो
Yes,
what
yes.
he is saying is कि we are not able to gather sufficient the question is saying that we are unable to gather sufficient relevant audit evidence. It's not that management is stopping us from giving those evidences. Maybe that is the difference.
Okay, anyone else would like to respond to Gurmeher question? Nimisha, you want to try?
So maybe you want to Google the definition of qualification of opinion, Gurmeher, if that's where the question is. But if you read the definition of a qualified opinion, the definition itself will say that the qualified opinion indicates that there was a scope limitation or an issue discovered in the financials that is not pervasive or an inadequate, or there was an inadequate footnote disclosure. So maybe you want to Google that definition and you'll know.
No, yeah, because Gurmeher has missed yesterday class. That's the reason this question is coming.
Okay. I'll read through it. Yeah. Okay.
Yesterday,
Got
actually,
it.
we discussed in detail. I'll show you really quick here, like first page of the notes. There we have discussed this one. So audit opinion. So audit opinion, if there is no issue, then you will be having unqualified or unmodified opinion, right? But if there is issue, then first you need to identify the issue is on account of scope limitation, that is a gas issue, or issue is on account of wrong application of the accounting policy or accounting principle. So that is called gap issue. If there is a scope limitation, for example, like company is not allowing you to connect with bankers for the bank confirmation, right? So there you need to assess whether it is being impacting just my cash and bank balances, or would it be impacting my sales, my receivable, my purchases and payable. So if it is impacting only one financial statement line item or two financial statement line item, and the impact is material, then you will be qualifying that respective financial statement line item. But if the impact is pervasive, that is, it is impacting your sales, receivable, collection, discounts, purchase, payable, cash, bank, loan account, everything, right? Then it has a pervasive impact and management is not allowing you to do those procedures. Then you will be disclaiming to give the opinion on the financial statement. And if management does not agree with the disclaimer of opinion, then you will go for a withdrawal. Right? Make sense?
Okay.
Right? This is what we have discussed yesterday. So maybe go through yesterday notes. Right? Everyone agree? Why it is a qualified and disclaimer is the right option?
Yes, sir.
Okay. So we are done with this topic. Let's jump into the last topic for the day, which is audit of internal controls integrated with the audit of financial statement. So here, for issuers, we have already discussed. Now we are discussing more toward the non-issuer, when you need to perform the integrated audit or when you need to perform the internal control audit along with the financial statement audit. So earlier, there was no auditing standard as per AICPA for auditing the internal controls for the non-issuer, as that was not mandatory, right? But back in 2012 or 2013, they have issued SAS 130. So earlier there was attestation standard to do the attestation engagement for the internal control for a non-issuer company. So now in 2011 or 2012, I don't recall the exact year, they have issued SAS 130 that provides similar guidance how we have for the integrated of issuers for the non-issuer as well. And it has now become an AICPA auditing standard, or you can say GAS. And it has superseded that earlier attestation standard, which was saying how to do the attestation service for the internal controls. So that is the change recently happened in last couple of years, which you need to be mindful that SAS 130 is now applicable for the integrated audit of a non-issuer, which is in line with the PCAUB auditing standard for the issuer as well. right? Here, what it says, an entity's internal control over financial reporting include the policies and procedure related to first, maintenance of adequate record that fairly reflect the transaction and disposition of assets of the entity. Second is provide a reasonable assurance that transactions are recorded as necessary to permit the preparation of financial statement in accordance with the applicable reporting framework, that is US GAAP or IFRS, whatever the reporting framework the company agree to it. Third one is appropriate authorization of transaction. That means this internal control is ensuring that appropriate authorization of the transaction, whatsoever the transaction the company is passing through in their information system is appropriate and authorized, right? They have like appropriate segregation of duty, appropriate like authorization metrics or makers and checkers, all those things. D point is provide a reasonable assurance regarding the prevention or timely detection and correction of unauthorized acquisition, use or disposition of the entity asset. So here you need to ensure when you are testing the internal control over the financial reporting framework. So you need to ensure that management have adequate records in place, management have adequate controls in place, management ensure appropriate authorization of transaction, management control should be sufficient to prevent and timely detect and correct any unauthorized usage. So auditor, what auditor will be doing here? Auditor will perform an audit of internal control or condition of internal control audit engagement performance. What all things as an auditor we will be doing to give our opinion on integrated audit report or on the internal control over financial statement, similar to what we have studied earlier in the list for the listed company or for the issuer case. First, an auditor may perform the audit of internal control only if the following conditions are met. First one is management accept the responsibility. So primary responsibility to design, implement, and maintain the effective internal control over the financial reporting is the primary responsibility of management. So here you will be conducting the audit only and only when management accept their responsibility. If management do not accept their responsibility for what you are doing audit, right? Second is, here it is mandatory required for a management to evaluate the effectiveness of internal control over the financial reporting using a suitable and available criteria. So here management need to mandatorily evaluate first. Management need to test the internal control first. That's a primary responsibility of the management. Third is management support its assessment of the effectiveness of internal control with sufficient and appropriate evidence. So for the big private company, just keep in mind a big private company or big non-issuer, they have generally an internal audit department. So that internal audit department will be testing the internal controls which management has put in place. And they will be ensuring the appropriate documentation. So internal auditor are part of management or not part of management? Whom internal auditor report?
To the management, they're a part of management.
Right? Internal auditors are part of the management, whether it's in-house or maybe third-party CPA firm, right? They are reporting to the management. So they are integral part of the management reporting, right? So what internal auditor is doing is also considered as that management is doing or they are doing in direction of the management. D points is management provide its assessment of effectiveness of internal control in report that accompanies the auditor report. So here management will issue, like internal auditor will give the reports on the effectiveness of internal controls to the auditor. Then fifth is management determine that as of the date correspond to the balance sheet date or for the period and date, the period covered by the financial statement. So same period, for which you are conducting the audit, the management should have been done all their internal audit requirements. Then only you will be accepting and going for the engagement to perform the test on internal controls. Make sense?
Yes, sir.
Gurmihar, Kashish, Rahul, Garvit, are you guys with me?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir. Yes.
Second point is management refusal to furnish a written assessment of the effectiveness of entities' internal control over financial reporting. That means it's a scope limitation. That means it's a gas issue. If management do not perform the internal audit and do not test the effectiveness of internal control and do not issue any reports to you, then that means it's a scope limitation, it's a gas issue. Then you need to assess whether you want to withdraw from the engagement or you want to disclaim the opinion, because it have pervasive impact, right? It is not one area for which they have not done internal audit. So if it is, let's say, for example, there are 10 areas for the overall financial statement for which, let's say, they have done the internal audit for 9 areas, but because of time constraint, because of any other reason, they have not performed the internal audit for the 10th area. Then in that case of scenario, it is being one particular area that can be considered as a one particular area material weakness. Whereas if they have not done at all, it means they have not done at all. It's a pervasive impact. So if in case of pervasive impact, what you do? Disclaim from opinion or withdraw from engagement. Right? Make sense? That's a professional judgment. Next is, and consider the impact on financial statement audit as well. If they have not done any internal control assessment, they have not done any internal audit, then when you are performing the financial statement audit, at that point of time, you are not putting reliance on control strategy, right? When you are not putting reliance on control strategy, that means you will be testing more substantive, right? So here, if you see third point, it is saying, consider the impact on financial statement audit if not able to withdraw because of regulatory or contractual requirement. If two things, one, it will increase your audit burden. Second, if you are planning to withdraw from this engagement, so then probably you need to assess the impact, severity of the impact on the financial statement audit as well, right? Third point is objective of internal control over financial reporting audit. What is the objective for an issuer? Why they wants to have audit on the internal control over financial statement for a non-issuer company? Objective is to provide an opinion on design and operating effectiveness of internal control. Internal control cannot be considered effective if one or more material weakness exists, right? Objective is to give an opinion on the design and operating effectiveness of internal control. What is a material weakness? A material weakness in internal control may exist even when the financial statements are not materially misstated. So two things, if you remember from chapter 4, we discuss on weaknesses in the internal control, significant weakness and material weakness. Do you remember what is material weakness and what is significant weakness? Yes or no?
Yes, to an extent.
What is that? To an extent.
अच्छे से याद नहीं अभी थोड़ा सा.
There are 3 types of weaknesses which we have studied, if you remember: routine, significant, and material. So I have given you a hint. Yes, guys. Anyone remember? Rahul, Garvit, Gurmehar, Nimisha, Mr. Jain.
याद तो नहीं आ रहा सर अभी.
What is going on? You guys are not revising the notes here. I'm very upset.
We're revising, but I think I'm forgetting the third chapter and all. I have to revise again.
No, this is like last week only we have discussed.
Sir, वो तो
Material
class ही
weakness.
miss हो गई थी class चक्कर में maybe.
So, routine deficiency is just a general deficiency. We just inform the management, and that's not pervasive enough to the financial statements. Significant deficiency is more important than routine deficiency, and it is included as a part of the recommendation letter to the management to improve on that significant deficiency. Material deficiency is one step ahead of significant deficiency, as in it's the most pervasive to the financial statements, and it's actually written on the management rep letter because it's a control deficiency. That's
like more than 60% is right. Two things which you miss, Nimisha. For routine deficiency, it's fine. Like those are not material to the financial statement, and those you give the management as a recommendation letter, right? Whereas for significant deficiency, it impact your opinion. So you qualified your opinion if there is a significant deficiency. And material deficiency, which has like more pervasive impact, that may result into adverse opinion for the ICFR audit, right?
I thought we put material deficiency on the findings, which is fine, but I didn't think significant deficiency is going to the management rep letter. I thought they are just on the recommendation letter.
No. When you are doing like audit of internal controls, let me show you in our last class notes. Yep, there is. So hope you remember this. Control deficiency, routine deficiency, significant weakness, and material weakness. Significant weakness have impact on single or few financial statement item. Severity of deficiency is lower than material weakness in terms of magnitude and likelihood. Communicate to the management and those charged with governance. And it will be considered as an impact in the report as well. Whereas material weakness, severity of the deficiency is material and pervasive, and likelihood and magnitude is high. Communicate to the management and those charged with governance, and it will impact your internal controls opinion as well. Opinion on the internal control over financial statement. Remember this?
So did we talk here about qualified and adverse opinion as well? नीचे हम लोगों ने कहीं include करा है? कि significant deficiency में we do a qualification and
for the internal control thing, yes. So maybe I can add over here. So,
अरे कमल कितने notes भेजोगे? छोड़ो मैं खुद ही ऐड कर लेती हूँ अपने notes.
करीब भेज देना बस notes लेकिन दोबारा से please.
Results into.
एक बार ये topic
Also, I
number
think
बताना कमल.
हाँ?
ये topic number क्या है?
Topic number है internal control deficiency.
नहीं, in terms of वो जो 4 point something
4.5.
Sir, moreover, इसमें ये था ना कि significant deficiency, it is significant but is less than our overall tolerable error.
No, it has nothing to do with number.
Okay.
Right, so this result into adverse opinion. and this will result into qualification. One second. Good point. Thanks, Nimisha. Good. Got it. Okay. So, yeah. So, material weakness. Everyone on same page? Material weakness. Material weakness in internal control over financial reporting may exist even when the financial statement may not be materially misstated. So, there might be possibility that there is a control issue, but it does not result, or it's an indicator that there might be issue in financial statement, but it's not conclusive that financial statement may have some problem. So there might be a control issue like makers and checkers is not there, appropriate segregation of duty is not there, but it does not mean the numbers are wrong. Right? Make sense? Yeah, Sanchit, Ayush, Garvit?
Yes.
Okay. Fourth point,
Yes,
the auditor should consider relevant ethical and independence requirements. So that's again is a requirement when you are doing the audit of internal control over the financial reporting. So you need to maintain your independence when requested to perform non-attest service in addition to the audit of internal control. So independence is required for the ICFR audit as well. Next is auditor opinion on internal control relate to the effectiveness of entity internal control taken as a whole and not the individual class of transaction, account balance, disclosure, and component. So whenever you are doing the audit of ICFR, you will be doing audit from the perspective of financial statement as a whole, not for any class of transaction, account balance, or disclosure, or of any component. Auditor is required to test only control that are to prevent, detect, and correct material misstatement to financial statement, because we are giving opinion on the internal control over the financial reporting, not the operational controls, not the regulatory controls, or not the other controls, right? So we'll be testing only those controls which will be impacting the financial statement, not other. Make sense? 6th point, performing an audit of internal control involve the following. First one is planning the engagement, understanding, obtaining an understanding. How do you obtain an understanding? By process narrative, standard operating procedure, desk process, inquiry process, right? Then evaluating the design effectiveness, which is like through walkthrough. Then testing and evaluating the operating effectiveness by performing test of control, and then forming an opinion on the effectiveness of the entity internal control. So this is all what you'll be performing. So what procedure you'll be doing to perform the walkthroughs and test of controls? Inquiries. What else you do?
Inquiries, observation, inspection, and
Performance.
Re-performance, recalculation, and
calculation.
confirmations, right? 7th point, auditor should consider following factor in planning the audit of internal controls. So now you are planning the audit of internal controls. What all things you need to keep in mind? First one is knowledge of internal control obtained during other professional engagement or earlier years. That means, for example, if you are doing audit of financial statement, at that point of time also you might have gone through process narrative, SOPs, walkthroughs, right? So all the knowledge you have gained from those procedures, or previous year audit if you have conducted. So all the knowledge you have obtained through the previous year audit. Second is matter affecting the industry in which entity operate. For example, if you're in the entity operate in tech company, right? So how the technology is changing and evolving period over period, right? For example, if your entity is in a pharmaceutical company, how those regulatory approvals are important and impact on the overall business of the pharma industry, right? Those all things you need to keep in mind, such as financial reporting, economic condition, law and regulation, or technological changes requirement. Third is matter affecting the entity's business, including its organization, operating character 6, and capital structure, right? So those things also you need to keep in mind when you are planning for the audit of internal controls. Fourth is extent of recent changes if the entity, if any, in the entity, its operation or internal control. For example, change in control owner, change in product line, change in service line, change in operation, right? Those all things you need to be mindful. Fifth is preliminary judgment about materiality, risk, and other factors relating to the determination of material weakness. How do you determine the material weakness? For that, you will be having a calculation of materiality, similar to the materiality calculation which you have learned in chapter 3 for calculation of materiality. Do you remember how we have calculated materiality? Yes? No? What are the factors that affect materiality? Yes, no? Why so silent?
सर वो ब्रेक के पहले डिस्क्लेमर दिया था, बहुत पढ़ना पड़ेगा सर, बोला मैंने.
Oh boy. That's not fair. Okay. Okay, what are the factors we consider to calculate the overall materiality? Do you remember? Like profit before tax, earning.
Yeah, so basically nature of the entity हो गई, complexity हो गई.
No, earning basis, activity basis,
Okay, okay.
asset basis,
Revenue
capital
basis.
basis, yeah, revenue basis, yeah, right? So there are three types of materiality we have studied: overall materiality, performance materiality, and tolerable error. Do you remember?
हाँ जी sir.
Yes, sir.
So you need to calculate that before
Yes,
getting
sir.
into this audit as well.
सर मैं उसमें मटेरियल वीकनेस में भी यही कंफ्यूज हुआ था कि मुझे वो टॉलरेबल एरर देखना है कि नहीं, जो भी हम जब हम उसके लिए मटेरियल वीकनेस देख रहे थे.
Anything is material or not material, how do you identify? With those materiality calculation only, right? F point is deficiency previously communicated to those charged with governance. For example, in previous year, you have identified any deficiency and you have communicated that to the management and those charged with governance. Have they improved or have they corrected those or not? That is also you need to evaluate. Legal or regulatory matter of which entity is aware of, type and extent of available evidence related to the effectiveness of internal control, preliminary judgment about the effectiveness of internal control. Right. Then public information about the entities relevant to the evaluation of internal control. For example, in the public, there's news going on that entity is going to sell off their assets, sell off their plant or sell off their machineries, or maybe planning to go for retrenchment. So those all news like media's news, press release, those things you need to keep in mind. Risk identified during the acceptance and continuous process. Do you remember acceptance and continuous process? Very first chapter.
Yes, sir.
Yeah. Yes, tell me.
So like we have to assess the risk, complexity of the account, and complexity देखते हैं उनका going concern का भी I think वहाँ पे test कर लेते हैं एक certain level पे. उनके inherent risks वगैरह basically check करते हैं क्या होंगे.
Anyone else would like to attempt?
External factors से जो impact आता है basically वो था.
Yeah. Anyone else?
Acceptance is basically to assess whether to accept the engagement or not. Basis preliminary exercises or judgment. Maybe we consider the last year's audit report to ascertain whether they were frauds or not. And then current year, if they are imposing any scope limitation, they are not ready to give access to their appropriate and complete documentation. So we'll assess whether to accept that engagement or not. That is a preliminary step when we start with an audit engagement.
Yeah, Ayush, Rahul, Kashish, do you guys want to add something to Gurmeher and Sanchit?
No, sir.
It's all gone in Malaysia and Singapore trip.
Sorry, sorry. I did not say that. I said I agree with what they said.
Okay, no problem. No, more or less you guys are okay. But just revise what exactly is mentioned over there so that for exam purpose, we need to keep those stuff in mind. Next is risk identify, relative complexity of the entity's operation. Then risk assessment when performing the audit of internal control along with the audit of financial statement, same risk is assessed for both purpose, financial statement audit as well as for the internal control. And then special written representation required when you are performing the audit of internal controls as well along with the financial statement. So additional representation required. First is acknowledgement of management responsibility to establish and maintain the effective internal control. Second is management has performed their evaluation. Here, this is a specific representation. You'll be asking the management whether you have performed the evaluation of the effectiveness of internal control or not. So they need to acknowledge that first. And third thing is a statement that the management did not use auditor procedure. Hope you are not using my procedure to evaluate effectiveness of your internal control. You'll be doing your own internal control assessment, right? So you need to clearly take that into the written communication or written representation letter, that a statement that the management did not use auditor procedure performed during the integrated audit as a part of the basis of their assessment. Make sense? 1, 2, 3. So far, so good?
Yes, sir.
Okay. D point. Management assertion about the effectiveness of entity internal control based on the control criteria as of the specified date or the period. E is a statement that management has disclosed to the auditor all significant deficiency and material weakness they have identified. F is a description of any material fraud and any other fraud that, although not material, involve management or employee who have significant role in the entity's internal control. So they need to give declaration on two things. One is if they have identified any material fraud, they will be communicated to you or not. If the fraud is not material but is being conducted by the employee or the senior management person, then they need to communicate that to the auditor. So they need to give the affirmation or declaration on that. They have communicated all material fraud identified, if any, or any other fraud conducted by the employee or the senior management person. Right? G, a statement indicating whether any significant deficiency and material weakness identified and communicated to the management and those charged with governance during previous engagement have been resolved and specifically identify if any weakness not resolved. So that means if previous year you have identified any material weakness which you have already communicated to the management and those charged with governance, whether they have resolved it or not resolved it. If not resolved it, then why they have not resolved it, then the impact of the same in current year. Right? Make sense? Yes, no?
Yes. Yes.
Okay, last point, a statement indicating whether there was subsequent to the date being reported on any change in the internal control or other factor that may affect, like subsequent event. Note over here, the auditor must audit and report directly on effectiveness of entity internal control over financial reporting. So here, auditor need to test independently. They should not rely just on representation. Same way, what is management representation letter? It's an acknowledgement of the management, but it will not prevent you to perform your audit procedure. It will not make you free that you will not perform your audit procedure. So it's, as an auditor, it's been my responsibility to independently perform the audit procedure and obtain appropriate and sufficient evidence to give basis of opinion, basis of my opinion. Make sense? There is not an option to report on management written assertion about the effectiveness of internal control. So you're not giving the opinion on the management assertion. You'll be giving opinion based on your own testing. However, there is an option to combine the audit report or on internal control over financial reporting with the financial statement. That means you can do the integrated audit report as well. SAS 130 codified under AUC 940 for the known issuer. First thing is follow SSAEs for examination of internal control. So earlier there was SSAE, I think 501, which is for the attestation engagement or examination engagement for the internal control. Now we follow the GAS for examination of internal control when you are testing those internal control in addition to the audit of financial statement, and you're planning to give the integrated report or together report of financial statement and internal control report. Right? The change in SAS 130 result from transition of guidance from attestation standard to audit standard. So what was the attestation standard earlier? That has been converted into the auditing standard, and there are certain things, nomenclature has been changed in that standard. What that nomenclature has been changed? A point, there is no longer an option to examine and report on the management assertion about the effectiveness of internal control. The auditor will be required to audit and report directly on the effectiveness of internal control. So this is one line change from the earlier standard to the new standard. Second is the term significant account or disclosure used in attestation standard has been changed to significant class of transaction, account balance, and disclosure to align with the GAS terminology. So this is a terminology change from attestation standard to audit standard. Third is permit to use the work of internal auditor and other in combination in obtaining effectiveness, in obtaining evidence about the effectiveness of internal control over the financial reporting. In attestation standard, you are not supposed to use the internal auditor work, but in auditing engagement, you can use the work of internal auditor, which we have discussed in chapter 4 in detail. Right? GAS are written in context of audit of the financial statement, but are to adopt as necessary in the circumstances when applied to an audit of internal control over financial reporting, that is integrated audit. Right? Objective of internal control over financial reporting audit. First is to obtain a reasonable assurance about the effectiveness of internal control over the financial reporting. Second is express an opinion based on the reasonable assurance you have obtained. Auditor should focus more attention on the area of high risk and fraud risk area, and auditor should evaluate the severity of the deficiency to determine whether deficiency individually or in combination is significant or material weakness. Right? You need to focus on two things: significant deficiency or you need to focus on two things: high risk area and fraud risk area, and you need to evaluate the severity of deficiency, whether it is a routine deficiency, significant deficiency, or material weakness. Depend on the nature and the impact of the same in the overall financial statement. Communicate the significant deficiency and material weakness to those charged with governance. An auditor report should modify on the internal control over financial reporting if any of the following conditions exist. One or more material weakness exists, limitation on the scope, auditor decided to refer to the report of the component auditor, and there is other information relevant for the ICFR, which is emphasis of matter or other matter paragraph. Right? If the auditor notify one or more material weakness, then express adverse opinion. So keep in mind, if it is a material weakness, then it's an adverse opinion. If the scope limitation, then disclaimer of opinion. Now let's look at the content of the audit report for the non-issuer, which is being for which you are doing financial statement as well as internal control audit both. So integrated audit report format for the non-issuer. Right? You all are with me?
Yes, sir.
Yes. Don't worry, we are just about to finish. 1 page, 2 page, and 3 page. We are done. Don't worry, we are getting there. So it's very much similar. First, you need to mention independent audit report, right? Second, address to the entity and those charged with governance. Here, it's a non-issuer report. So here it will go with the introductory paragraph. Third paragraph is introductory paragraph, in which you'll be giving which is the entity, which is the period, what are the ICFR, what is the date of the opinion, and criteria against which internal control have been measured. So that is being mentioned in the introductory paragraph. Fourth is management responsibility paragraph, where management responsibility go for the issuer report in the opinion paragraph. Do you remember we discussed before the lunch break? Management responsibility and auditor responsibility are part of which paragraph in the issuer report? Hello? Are you guys?
Yes, it's in under opinion.
How about others? Guys, are you here? Basis of opinion include management responsibility and auditor responsibility, right? That will go in basis of opinion paragraph for the issuer, whereas for the non-issuer it is being separately mentioned.
Sorry, one question. It's a non-issuer. Why are we talking about internal controls in the first place when it comes
to non-issuer? There are two types of report. When you are doing only financial statement audit report, which we discussed in yesterday class, right? All the 5 types of report. But for the non-issuer also, there might be possibility that management will say, do the audit of internal controls as well. Maybe they are going for an IPO. Maybe they are going for a funding round, right? Maybe they are, you can say lender would request, right? So it's depend on management choice. It's not mandatory. But if management choose to do the to ensure the internal controls audit also, then you need to follow this.
So when you say but issue separate reports, so you will be issuing a separate audit report for FS.
Both options are available. You can issue an integrated report, which include financial statement and internal control, or you can issue 2 reports, financial statement separately, internal control separately, but you need to give the reference if you are issuing 2 reports to each other.
Is this meant to be treated as an exception, or it generally happens that, because in my understanding, generally non-issuers would not go for integrated audit?
It comes only when it is required by the investor, or whether they are planning to go for IPO or maybe funding rounds kind of thing.
Okay, understood. Thank you.
Generally, what I have seen from my experience. Otherwise, why they need to invest extra money, paying to the auditor, and extra pain for getting these things done as well. It's a painful activity.
Yeah, okay. Thank you.
Right. So auditor responsibility is almost same, which we have discussed earlier. Statement about that auditor belief that audit evidence has been obtained to give the sufficient and appropriate basis for their audit opinion. Then a section with the leading definition and limitation of ICFR, like same way how we have done for the integrated audit for the issuer. Include the following: a definition of internal control over financial reporting, and a paragraph stating that inherent limitation, internal control over financial reporting, may not prevent, detect, and correct all the material misstatement because of the change in condition, or that the degree of compliance with the policies and procedure may deteriorate. Right? Then opinion paragraph, signature, city, state, and the date. So this will be the overall content of when you are planning to give the audit report for a non-issuer on internal controls. Right? So here 3 things you need to be mindful. First, if the auditor issues separate report, like we were discussing just before that, if you are issuing 1 report on financial statement and 1 report on internal control over the financial reporting, then financial statement report mention the cross reference to the internal control report, and internal control report give reference to the financial statement report. That means you need to add 1 cross reference line in both the reports, that for control purpose look at this report, for financial statement purpose look at this report. We have, or there you will be mentioning, we have also audited in accordance with the GAS, internal control over financial reporting, as of year end based on identified criteria, which is COSO 2013, and our report date this. You need to mention the date and express the opinion. What opinion you have given on the internal control report, you need to mention that in internal control over financial reporting. So this one-liner you need to add in the financial statement audit report. And coming to the other side, we have also audited in accordance with the GAS, the financial statement of the entity, name of the entity, our report date this, and express an opinion this. So second paragraph, this paragraph you need to mention in the financial statement audit report, giving the cross-reference to the ICFR report, and this paragraph you need to mention in the ICFR report, giving the cross-reference to the financial statement audit report. Make sense? Yes, no?
Yes.
Yes, sir.
Okay, let's jump into the practice question. 2 questions here only. First, a report of an issuer's integrated audit need not include which of the following? A report of an issuer. Keep in mind, issuer integrated audit report should not include which of the following statements. First, the audit was conducted in accordance with AICPA standard. Management is responsible for maintaining effective internal control. Is management responsible for maintaining effective internal control? Yes or no?
Yes, sir.
Come on, guys. We are about to finish.
Yes, sir.
Yes, sir.
Wake up. Yeah. So second statement is right. Third statement, auditor believe the audit provide a reasonable basis of evidence to issue the opinion. So is it right or wrong? Does the auditor
Right.
is required to mention this, that they have obtained reasonable, sufficient
Yes.
and appropriate audit evidence to provide reasonable basis? So third statement is also right. Fourth statement, internal control over financial reporting includes policies and procedure regarding the ability to report the financial data consistent with the management assertion. Does this need to be mentioned in integrated audit report? Yes or no? Fourth point. Does this come in integrated audit report or not? Come on, come on, come on. Don't delay your departure. Yes, Mr. Sanchit, Rahul, Ayush, Nimisha. What's up? Garvit, Gurmihar. What is stopping you to respond? Or you have already taken off for the class?
No, sir.
So this fourth statement is right or wrong? What's up? Is fourth statement right or wrong? You want to see the GM report?
Yes, sir.
Policy and procedures, ability to report the financial data are consistent with management assertion.
Hello. So I
Yes,
was saying
sir.
fourth statement was correct. Actually, there was a network issue at my place.
Yeah. So if you go back and check at the integrated audit report, so this one is also correct. So this one is clearly incorrect. For the integrated, for issuer, you have to use PCOB standard, not the AICPA standard.
Right, sir.
Right. So what is the call of the question? A report on issuer integrated audit need not
include.
So AICPA standard is not required to include because you'll be following PCOB standard. Make sense?
Yes, sir.
Last question of the day. How should an auditor react if an auditor performing an integrated audit identify one or more material weakness? You have identified one or more material weakness of a non-public entity. That means a non-issuer. So for a non-issuer, you are doing integrated audit and you have identified more than one material weakness. So what you will be doing? Disclaim from opinion, expand the audit of internal control to identify deficiency less severe than material weakness, conclude that the financial statement are materially misstated because of the material weakness, or express an adverse opinion on entity internal control. What are you going to do? What is the call of the question? You have identified one or more material weakness in the internal control of a non-public entity, of a non-issuer.
सर अभी हमने पढ़ाई तो था express an adverse opinion on the entity because there is material weakness.
So disclaimer of opinion is wrong, right? Expand the audit of internal control to identify deficiency less severe. So that you should not do, right? Third point, if you see, conclude that the financial statement are material misstated. If you have identified a material weakness, does it conclude that you have material misstatement as well? It is not necessary, right? We studied this. If you remember, it's clearly mentioned in the material weakness when we are studying. Are you guys with me? Hello?
Yes, sir.
Yeah, do you remember like this statement?
Yeah.
A material weakness in internal control over financial reporting may exist even when financial statements are not materially misstated. You cannot conclude that if there is a material weakness, it may result into a material misstatement, right? Make sense?
Yes, sir.
So the fourth option is correct. Express an adverse opinion because it's a material weakness. You'll be expressing adverse opinion on internal control, right? So this is it for today's class. Any doubt? Anything need more clarification? I know a lot of things require more study, but any clarification you guys need so far?
No, sir.
Okay, cool. Then enjoy the rest of your Sunday. Request you all to please at least read the notes, right?
Yes, sir.
So much time,
Yes,
effort, and energy I'm investing for you guys only. So if you don't read it,
sir.
like that's not fair with me.
No, sir. Definitely we will.
We'll definitely do it. We'll definitely do it.
Okay, so let's meet on next Saturday, 10 o'clock.
Sure. Done.
Enjoy the rest of your Sunday.